Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. And now we've got that out of the way, let's jump into the Bitcoin chart and let's cover some zero BS TA, and that's what you guys are here for. Okay, no Moonboy stuff, no Doomboy stuff, just trading the charts. So quick follow-up, what we'll do is we'll start off with a couple of trades that we've had in the group this week, and I'll explain why we took those trades so you guys can learn from that, and then I will move on to what I'm looking at next, but we're going to keep this one really short and sweet because there's not a lot to go over. Okay, my thoughts remain very similar. So here we go. First and foremost, let's zoom in. So obviously we're still consolidating up here. We're still making this grinding price action. Upwards consolidation, there's many terms for it, whatever you want to use, it's absolutely fine. It's not necessarily the healthiest of signs, especially if price does reverse at some point, because you've effectively got a cascade effect of lows there, which if that starts to trigger stop losses, then that could turn quite nasty, especially if you are longing breakouts, which, as you've seen, is not been the best of plays. So this starts off with last Thursday we did the public YouTube, so moving into Friday. So this was Friday, we had two setups on Friday. We had the long and the short. So this is what we were looking at on Friday. Quite simply, once again, obviously this was the overall high, and I was looking for those highs to be swept, breakout traders to get caught offside, because obviously this is major high time frame resistance. Again, I've been banging on about this for months now. Major sticky zone, so it's not somewhere that you want to be longing into. And what did we do? Well, we got initial wake up, back down, another wake up, and back down, and ended up giving us the short trigger. Obviously, we got the breakout traders up here caught. We got the early stops, early shorters, stops being run, and then we reverse. So obviously, this is what we were looking at in the morning's update, and then we were looking to play it back down roughly to around this naked point of control, which did in the end get front run. And we actually front run marginally the golden pocket here. So this is what I was looking at, effectively taking the highs, coming back down, but maintaining that overall structure. Okay, and the reason why I was confident in this area here holding up is because the overall structure, we hide this for now, is still bullish. Okay, so we're still making higher lows. Okay, until that ends, the trend is still up. Okay, so once again, it's absolutely fine taking these counter trend trades, and I talk about this time and time again, but you need to know when to lock in profits and when to get out, because the likelihood is this trend is going to continue. It's only until this higher time frame trend goes, then that's when you can hold on to your shorts a little bit longer. But until then, we need to see a confirmed breakdown to give your shorts the opportunity to run. Okay, so therefore we had the short from the high. Now again, I'm not going to sit here and laugh because I actually didn't take this long. I'm still holding a long from down in this region. Once again, another golden pocket bounce. But I know a lot of the guys in the group did take this short because it came back down into the golden pocket, slight front run. Then you had your local change of market structure to the upside. So whether you longed down here at the golden pocket or you longed up here after the market structure change, either way, regardless, you know, arguably you could have actually had a better risk reward by longing up here. But either way, I know a lot of the guys in the group took this trade and very well played. Okay, and then targeting, taking the overall highs again. And what did it do? It took the overall highs again. Okay. So that was last Friday's setup, and then moving into yesterday, another great opportunity for another swing failure pattern and another short. Now, I was coming into this live stream yesterday. I'm not going to play a recording of it because my language is terrible. And effectively what I was looking at coming into this is looking over at basically these highs here. So obviously we'd come up prior. This is the swing failure pattern high. And what we can see here, I've got three different lines of CVD. The one that you need to pay attention to here is the spot CVD, which is the yellow line. And spot weren't participating in this rally. This rally up that took the highs was mainly driven by perps. Okay. So therefore, spot's not participating. This to me is a potential sign for weakness. So what I was updating the guys in the group, literally we came into the group onto the live stream within 30 seconds. We had talked about this. Spot wasn't participating, looking for those highs to be swept, and then for it to roll. And what did it do? It swept those highs. People got stopped out. We can look at this on order flow. Right here, these were the overall highs. Got my yellow line. Price came up into it, and it was a nice short squeeze. Stopped out any shorts from back here and prior. Stopped them out. We can see open interest decreasing. People got stopped out. Decent volume in the end. Not massive volume for this exchange, but decent enough volume for a local trade. And we got the short set up. Okay, so that's the reason why we shorted this in the group. We had a take profit 1, stops to entry, and now we wait and see. So once again, this is the sort of time where you need to be cautious. This can still come down a little bit lower. Again, if we do the exact same thing we've been doing back here, we just throw the golden pocket on. And if it is to maintain the local uptrend, then realistically, you don't want to be losing this zone here. Okay, so this is what I'm looking at right now on a lower time frame. So if it's going to continue making these higher lows, then you want this to be another higher low for another higher high. Okay, that's what you want. So again, these shorts are still against the trend. I'm still holding longs from lower, as I've said, down here. I'm still holding longs from down here. But for now, it's time for caution, and that'll move in then to today's video and why it is time for caution up here. So again, if you've not been watching our previous videos or you're brand new to the channel, because I know we've had a big influx of subscribers lately, greatly appreciated. We're still in this high time frame sticky zone. Okay, now this sticky zone technically goes just above these highs here. It goes up to about 40.3 there. And the reason being is there's a lot of confluence in this zone. So the first confluence, again, I've been showing this on stream for a while. The most basic confluence that you need within this zone is you've got that point of control there. Okay, that point of control there. I've been talking about this for a long, long time. This is your major sticky zone. So effectively what you're trying to look at here is, can price break back into this old range? Okay, if price can get back into this old range and clear this point of control and the top of this red box without a significant pullback, then there's a chance that it can go up towards the range highs. Okay, so this is the key, and this is how I'm looking at this market right now. I am not Fomo longing into this zone here. And I know a lot of influencers will get you to say, look, it's bullish, it's bullish, it's bullish. Yes, I agree. Structure is bullish. It's up. Structure is still in an uptrend. It has been since the beginning of the year, making a series of higher highs and higher lows. It's still in an uptrend, and I agree with that. However, this zone is not the place to be looking for fresh longs. This zone is to either A, be taking profit on your current longs, or B, looking for opportunities to hedge your bet. Now, for me, this flips. If we flip this, if we clear the high 40s, as in 40.4, 40.5 roughly, if we clear that, then we can look realistically for a run up towards 43 initially, but then more realistically, you're probably going to be looking up in the zone that we've been talking about, 47-ish to 50k. Okay, so again, the next sticky zone, and the reason why that's the next sticky zone, once again, just like we've shown before, is throw it on an overall volume profile, and you can see the overall point of control for this top range is up here in this zone. Now, it is a big zone, is this. Each individual exchange is slightly different, but you've effectively got a zone up to about 50k roughly, high 49s, down to 47s. Okay, so you've got a big sticky zone here. Now, once again, the same principle will happen if we get there. If we get there, it's not the time to be Fomo longing. It's the time to be taking profits on longs, and it's the time to potentially look for head shorts. Okay. And that's as simple as it is, okay? If this, then that. So if this zone is flipped, then we can be looking for higher prices, and I will continue to trend trade all the way up, and that's absolutely fine, but I won't be looking to actively short within that zone between these two areas. Okay, just like right now, I'm not actively looking to long this now. I'm looking, well, I've already taken profits on the bulk of my longs, but I'm looking for opportunities to hedge my bet, hence why I am shorting swing failure patterns at the moment, because they're giving me very nice setups, and it's pretty easy money. It's pretty easy money, but eventually one of the ideas will give way. We will either break up or we will break down, and it's absolutely fine. Okay, so that's what we're looking at next. Okay, so once again, sticky zone, not interested in longing into resistance. It's just not the smart way to trade. Okay, and breakout trade for me here, and again, I don't breakout trade, but for those that are breakout trading, it's not a case of breaking out trading each one of these breakouts. Okay, because this, as you've seen, The reason why we've been shorting these, because it's just a very easy way to lose money if you are trading these breakouts. Okay, the real breakout, if there is going to be one, would be clearing this red box. That would be a real breakout. And again, I'm not interested in trading a breakout, but if that's your cup of tea, if that floats your boat, then that's the zone. Okay, right. If you have learned something today, or you've enjoyed today's content, then don't forget to hit that like button. If you're not subscribed, consider subscribing, and don't forget to hit that bell notification, because it's pointless watching these videos back a week later when the moves have already played out. All right, gang, that'll do. As you were. Bye-bye.